Force Motors. Unfortunately, we don't have coverage in the space. What we believe that in the current environment, tractors is something that will far outperform in the entire auto segment, and our top pick or the preferred pick is M&M. It is even, despite being a market leader, the tractor segment growth for M&M is far outpacing the industry tractors growth. That apart, in the passenger vehicle segment also, their leadership growth in terms of SUVs as well as the recent launches in the EV segment, that keeps us excited that this is the story which would continue to do well. We have a buy rating on M&M and a target price of around 3,500.
3,500 being the target price on Mahindra. Got that. Yeah, it's been a fantastic wealth creator, no doubt about that. On defense itself, Siddharth, before we let you go, given that things have run up so much, I mean, it's a pretty red hot market, right? So you have to buy now with a fair amount of discretion and caution. What would you still say would be your topics? For instance, look at Bharat Dynamics today. We all know, great company participating in all the critical missile programs. But then the issue is P&L has to match up, and that has to justify the valuation. So does Bharat Dynamics make the cut? Would it be BEL, something else? What are your top picks?
Yeah, Survi, I think that's the dilemma, especially for a sector which has seen a sharp rally in a short span of time. What we believe is that the long-term structural story in defense continues to be very strong, and the earnings growth, if you look at for a company like Bharat Electricals, we are forecasting about 18-20% earnings growth. For Hindustan Aeronautics, I think it is about 15 to 18%. While in terms of valuations, there is a little bit of more headroom, I think, but the upside is limited. For Bharat Electronics, we have a target price of 410, while for HAL, we have a target price of 5,650. One should approach a gradual, you can say, accumulation strategy for defense and keep accumulating these stocks on a staggered way, and buy and hold them for the next few years. That should make good money for retail investors.
Okay. And last but not the least, let's talk about ITC. I was just getting a technical check done with our technical expert a while back, but fundamentally, the stock's again gone into a range. And ITC does that, right? It can be in a trading range for a long time and then suddenly it bursts up. What's your view?
I think ITC is the classical value stock which keeps surprising us when the entire street becomes negative. I think the block deal is done with. The recent earnings were pretty good in terms of the core cigarette business, where we saw strong growth in volumes as well as margins. The staples is something that we have seen weak numbers across the FMCG space, but we continue to like ITC. We believe that the core business that continues to provide strong support, and especially if the mid-single digit volume growth in cigarette that continues, margins in FMCG is likely to improve in FY26, and that could trigger a valuation re-rating. The dividend yield is also strong, so we maintain a positive view on ITC with a buy rating and a target price of 525.
525 on ITC. Okay, got that. Thanks very much, Siddharth. Good to have you on today. Quick fire hits and misses of the result season. Thank you for taking up the questions. We'll take a break on that note, come back on the other side. Rahul Singh, CIO Equities at Tata Asset Management, will join in with some perspective.
You know, people often ask me why I left my steady job at the call center. I wanted more out of life. So, I launched my own startup. Do you want to know how? Then start up your own business as an LIC agent. You want it, we've got it. Great products, zero investment, leading organization, and unlimited opportunities. So, are you ready? Now think big. Become an LIC agent.
Visit our website or contact your nearest LIC branch.
Dadu, do you want to upgrade to business class?
Why not? Great flying, Captain.
Now go 449 kilometers in a single charge. MG Windsor EV Pro. Live business class.
बेटा शायद बारिश होने वाली है, छाता लेके जाना।
नहीं होगी पापा।
बुरा लगता है ना जब कोई आपकी बात नहीं सुनता। बार बार कहते हो, सालों साल कहते हो, फिर भी आपकी कोई नहीं सुनता।
रेडी सर?
Yeah, ready.
Yeah.
Investments are subject to risks. Read all documents carefully.
थोड़ा और फास्ट सर।
Investments are subject to risks. Read all documents carefully.
In today's news, the markets continue to show volatility.
At least इस बार,
See a downward trend.
please मेरी बात ध्यान से सुन लेना. Why risk it? Invest a portion of your savings in safe and secure fixed deposits from Axis Bank.
Safe investing is smart investing.
Welcome back. Well, the markets are trading with a mild cut of close to 40 points, but the point we've been making is plenty of stocks actually from the broader markets. They're doing a thing of their own, and a lot of stocks, in fact, have moved to the high point of the day as we speak. Case in point being a Bank of India. Just pull up that stock. It's up only around 2%, but majority of that move has come in the last few minutes. So I think we should get an intraday chart of that particular name as well. Rahul Singh, CIO at Equities at Tata Asset Management, joins us on the show. Hi, Rahul. Good afternoon. Good to see you win. Well, what are you making of our current market setup? You're at around 21,700. Things were eye-poppingly much more attractive. And that's why we did see that a lot of interest came back in and the markets have bounced close to around 15%. But earnings have still been rather subdued, maybe on expected lines. Expected to pick up from year on, though flows have been quite good. Both domestic flows and the FIs are making their way back. How are you feeling about the Indian markets as of now?
Yes, I think the markets or the valuations are at an interesting point because from here on, the earnings outlook for next year becomes important. Obviously, the global liquidity environment has turned positive for emerging markets, including India. So that's a good news, and that kind of puts some kind of a floor to valuations in my mind. But whether we give what kind of returns we can give from here is going to be totally dependent on the earnings outlook for the next financial year, because we've not had a great performance from earnings in fiscal 25. But the good news is that all the things which were going wrong in fiscal 25 in terms of liquidity, in terms of the government spending, I think are normalizing very, very fast this year. So I remain more optimistic about this year's earnings growth rate for Nifty, more in maybe around the low teens number, is looking like a possibility, which is compared to last year's weaker base. I think consumption is also being pushed a lot through both monetary and fiscal policy. So there are building blocks for earnings to look better, not supremely better than last year, but significantly, materially, I would say, different from how last year panned out. So to that extent, I think markets are looking reasonably stable with not too much of downside risk at this point of time, in my view.
All right, that's good to know, Rahul. Great to have you on the show this afternoon. Thanks for joining in. So there's not much downside risk. Then let me flip that question then. Then what's the best upside play? I mean, having gone through the earnings season, looking at the second half of the year perhaps, where do you see the maximum prospects for growth? Which segments or sectors?
Well, definitely, I think large caps are looking much better from a risk-reward point of view. I think that's where the downside risk is the minimum. It's probably much higher in mid-caps, the downside risk from a valuation point of view. So I would like to make that distinction very, very clearly when I said about the downside risk. And also from a segmental point of view, from a sectoral point of view, I think we've been saying about BFSI, but things are finally playing out. And if you look at the performance of banking, as well as the insurance sectors, they've been one of the more solid performers in this volatility of the last 3 to 4 months. I think there's been more steady performance from BFSI, and I think it's just the beginning. We're probably going to see next 1 or 2 years of this whole performance percolating down to different categories of BFSI as we speak. Also, I think selectively, given the push both on the fiscal and the monetary side, consumption is something where we need to watch out for in terms of early signs of revival. And I'm talking of the whole spectrum of consumption, not just FMCG. So these are the two kind of buckets I would focus on.
Okay, all right. What about some domestic-facing themes, Rahul? Something that will be, reasonably protected from what's going on in the globe. Case in point being cement or maybe real estate. From the domestic-facing themes, what do you like?
Yes, those are two sectors which definitely come to mind clearly from a domestic point of view, or even though banks are also mostly domestic plays. So to that extent, it kind of qualifies for domestic play also. But cement, yes, I think it's been a sector which is promised so far and not delivered on earnings. So to some extent, I think if the pricing discipline comes back and the prices are under control, the input prices are under control thanks to lower commodity prices, this could be the year when earnings finally start to deliver for cement. As far as real estate is concerned, I think we are well and truly into the mid to late cycle of the growth. So from here on, I think we are very, very selective on real estate, even though the demand momentum continues for real estate across the various markets. The valuations and the risk profile of each real estate company is now very different compared to at the beginning of the cycle. At the beginning of the cycle, everyone benefits, but at the mid to late end of the cycle, you need to become more cautious given the profile or given the mix of the geographies and given what's happened in each of those micro markets or geographies.
Rahul, on the financial space, what part of it do you specifically like more? I mean, is it large banks, private PSU? Is it non-banking lenders? Or, I mean, then there's the other related parts as well, right? There's wealth management, capital marketplace, brokers, etc. So it's a very vast spectrum. What is your order of preference here?
Yes, you're right. There is a vast spectrum, and that's the good news because the whole valuation and the growth outlook kind of changing has to percolate down to the last possible segment of the lenders at least. And that's where I think the opportunities and the excitement is. And obviously, large private sector banks are now a consensus view, so I'm not going to repeat that. But I think there is also opportunity in the NBFCs because they will start benefiting from the lower rates sometime in the second half. There is also, I think, from an NPL perspective, there has been a lot of tightening of controls by the regulator, which is resulting in, I would say, not very volatile NPL as we used to see earlier. So that's also something which is positive for NBFCs. And the other segment, which is time corrected for a significant amount of time, is the housing finance companies, the small and mid-sized housing finance companies. So these are some of the segments which we are focused on.
Okay, all right, Rahul. The renewable sector theme that was in flavor, just not too long ago, 18 months or so ago. But that seems to have been put on the back burner. So some of these companies are guiding still for very, very good times ahead. Is that a sector you're interested in, or do you think the good times have passed? There's too much of uncertainty. You'd rather stay away?
So renewables went through a euphoric period, you're right, and I think the valuations crossed certain limits. So, it's a cycle. I think the build cycle for renewables is probably going to peak out in the next 2 to 3 years. So you have good earnings momentum, but you don't have sustainability of those earnings for some of those equipment suppliers. So one will have to be extremely careful about when these companies peak out in terms of valuations if they have not already. Because ultimately some of the barriers to entry which were there earlier may or may not sustain. So to have lofty valuations with these kind of business models is a challenge. As far as the utilities are concerned, on the renewable side, there are a few pure plays, but what we like in the power space is the utilities, whether it's the fossil fuel or the renewable energy. I think that is where the valuations are reasonable after correction. and I would, we are more focused on that segment as compared to the equipment manufacturers in the renewable space.
Rahul, hi, afternoon. This is Rima here. On IT, where do you stand? Numbers have been disappointing. FY26 is going to be a challenging year. But on the other hand, there is that argument that these are dividend-paying companies. And now, with the correction, the dividend yield is fairly attractive. So yes, it's going to be a low growth year for the companies, but the downside may be protected. Considering the volatility, would you look at IT stocks?
Yes, I think you summarized it very well, that it's become a range-bound sector. I don't see a lift in revenue profile for the sector as a whole from mid-single digits to 15%. Unless that happens, it's very difficult to go overweight on this sector. Today, the downside risk and the upside risks are kind of balanced because, as you mentioned, on the downside, at 10-15% lower levels, the dividend and the free cash flow yield starts to provide a floor to the valuations. But on the upside, we need to see reasons, or we need to see the logic for growth to revive for the sector as a whole to mid-teens for us to start looking at a valuation re-rating. Otherwise, it's going to be a little bit of a range-bound sector for now.
Okay, all right, got that point. Thanks very much, Rahul, for joining us today. Good to get that perspective from you on the market and all the themes and sectors that we've discussed. Thanks for joining in. Need to take a quick break, come back on the other side. As always, a check on all the dealing room chatter coming out with Nimesh. And then we'll get some final trading ideas with Mitesh as well.
ओए सनी जल्दी कर अंधेरा होने वाला है। ओ भाई लॉन्ग शॉट में मारी हो, बॉल गई तो मैं लेने नहीं जाऊंगा। क्या यार?
ओए तू अटकॉल छुट्टे, स्टेडियम चमकने वाला है। अंधेरों ने अपना रास्ता बदल लिया है, उजाले की
आपको देखते ही हर किसी के चेहरे की रौनक बढ़ रही है। अब हो कौन?
हम हैं एनटीपीसी, देश की सबसे बड़ी विद्युत उत्पादक कंपनी।
पिछले 50 सालों से एनटीपीसी कर रहा है भारत का कोना कोना रोशन। एनटीपीसी सेलिब्रेटिंग 50 years of powering growth.
VIPShadi.com, India's most trusted matchmaking service for elites. पता है क्यों? इनके सालों की एक्सपर्टीज से हजारों सफल कहानियां जो बनी हैं। Register now.
I believe I can. I believe I can change the world. I believe I can fly. I believe I can touch the sky. Welcome to the Eye. I am ICFI. Belief called I. Welcome to the Eye. The ICFI.
आप कौन? आपके स्टॉक एक्सपर्ट्स आपको बताएंगे स्टॉक को कैसे बताएंगे।
सर, इस पे लिखा है डूबते को तिनके का सहारा।
अब ये एक्सपर्ट्स आपको कितनी बेफिक्री से ट्रेडिंग करा पाएंगे ये तो पता नहीं, पर यू ट्रेड एल्गोस की ओरिजिनल बैक टेस्टेड स्ट्रेटजीज के साथ ट्रेडिंग बने एफिशिएंट और आसान। डाउनलोड द ऐप नाउ। Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the Motilal Oswal studio. Well, it's around 3 p.m., and that's the time when Nimesh joins us to tell us what is he picking up in terms of the flows and how are the markets moving. Nimesh, tell us, well, what's the feedback you've received?
Well, Nigel, today is an extremely quiet day. In a very narrow range since morning. The Nifty has been pretty much flat, so to speak. The Nifty is down just 0.2%. But, even the broader market index may look very flat, but there are a lot of individual names which are buzzing in trade in the broader markets, largely reacting to either news or to earnings or to some flow. So that's pretty much sums up that there is a lot of action in the broader market names. From a flow perspective, again, it's a muted day. As I've been saying, in the expiry week, don't count too much into the flows. And again, today you'll see a large number because of the ITC block, right? So ex of that, we might not see a big number today. So that's overall feedback. But within that, I guess it's the PSUs which continues to witness buying interest. Today it's a case for PSU banks to see a bit of traction now. Again, defense PSUs continue to outperform. So the PSU as a basket has been good, but otherwise it's been a very quiet day with some very selective broader market stocks outperforming.
Okay, all right, Nimesh. What about individual stocks? What are you picking up?
I'll start with block deals. So the first name on my list is Tata Tech. Again, the stock is marginally under pressure today. The volumes are pretty much muted, but there is a very strong indication of a large block deal coming in Tata Tech very soon. The private equity is a large holder there, and that could be a potential seller. So that's the buzz there. The second stock is Protein eGovern. That's been buzzing in trade. The volumes are also picked up today. And I understand, in general, there is a bit of interest back from larger HNIs in Protein eGovern. So that's second stock. The third stock is HDFC Life. I've been saying for the last few days that there is a bit of traction back in the insurance names, and those are well bid. Today stands out for HDFC Life. There was block bids at lower levels, but it looks like that's been bought, and since then, we've seen a bit of recovery in that name as well. And last couple of stocks where there is selling today, surprisingly, Hoodco and ONGC may not see that big reaction on the stock price, but there is delivery-based selling happening in both these names from larger FIs. So expect high delivery volumes, but on the sell side in Hoodco and ONGC today.
Interesting list as always, Nimesh. And then in the evening, we come to know D Street confirmation, right?
Absolutely.
D Street chatter confirmation. But you've had a fabulous, fabulous streak. Always look forward to this segment. Mitesh Thakkar is now back with us for a few BTST calls now. Mitesh, things are very, very quiet. We have to look at individual stocks for action now. What would you advise for trade?
Yeah. See, I think as I said, the market will be subdued and within a range. So I think it has to be stock-specific kind of basis on which you can trade. Right now, I have a BTST on Hind Copper with the stop at about 246.5 for targets of 252. The stock has done well today, giving a pullback from the day's high. So I think it could be a good trade on the upside. And the other one is BTST on IGL. I would actually want to see the stock get past 204. So buy about 204 with the stop at 211 and targets of 220 can be looked at.
Okay, all right, Mitesh, thanks very much for all the trading advice today. You have a good rest of the afternoon and evening. We'll connect again tomorrow. For the time being, let's move to the big exclusive. Earlier, we caught up with former RBI Governor Raghuram Rajan on a whole host of issues, including Trump tariffs and the state of the global economy. Listen in to some of the highlights. Here's him talking about the India opportunity when it comes to global supply chains.
Well, it could be India's moment. I think that certainly all supply chains are being reinvestigated by the firms that run them. And if India can put out the red carpet and say, we will have a predictable tax and policy regime, we will allow you to also produce for the domestic market, and don't worry about the pushback from Indian industry, which feels threatened. We will make sure these policies are in place for the foreseeable future. It could result in a significant increase in foreign direct investment. Of course, industrial countries don't want to see supply chains moving from China to India and not coming back into the domestic market. But if India plays its cards well and doesn't make it front and center all about subsidies, that it is about a better production environment and it offers a very viable alternative. And some of the states in India are very interested in doing this. I think if we can do that, it could be India's moment. But a lot more action is needed, and it has to be proactive, not just reactive. It is about creating a better environment in India for foreign direct investment, something we haven't paid enough attention to in the last few years. I mean, it would be the rare CEO who wants to cross the Trump administration at this point. But it is a negotiation ploy, not so much ploy, but there is room for negotiation. Apple can point to all the work it's doing in the US and the profits it's generating in the US as a result of its creation of new designs, new intellectual property, etc., and say that the manufacturing is essential in a cheaper place so as to get Trump products out at a reasonable price to US consumers, but also to consumers in the rest of the world. That kind of reasonable argument has to be made, but also it does indicate the importance of not trumpeting the fact that you're coming away from China and putting it in India. There is a lot of value to flying under the radar screen at this point and doing what you need to, but also having a frank discussion with the administration on what can be brought back and what can't. Screwdriver technology assembly stuff like that is going to be hard to bring back to the US. But certainly, the Apple can say that there's a lot more R&D going on as a result of its ability to sell its products across the world, and that R&D happens in Cupertino, not elsewhere in the world.
Okay, interesting conversation there. Prashant is also now joining in, and you've been having a slew of conversations, including on how much Europe is spending on defense and what it means for us.
By the way, it was 3:10, right? So
Good. So yeah, maybe we can get Nigel as well on the window.
Late appearance.
Late appearance, but now
it's a house full.
Now it's full
house full.
Rima, Hindi and all.
A sitting sandwich between both of you all now I've picked up.
Okay, so yeah, I mean, this Europe rearmament is a big talking point, and so many companies that we have spoken to, and just yesterday, I think, which was the company in the morning, Jyoti CMC, out of the blue, I mean, they spoke about how Europe and European defense is a big opportunity. They've got a plant in France, is what they told us, and that they're not even a defense company, and so many other defense companies have also said that it's a source of demand in that sense. Europe and what Europe will spend as far as defense is concerned. So this was a conversation that I had, with Benjamin Heelan. He's the European defense analyst at Bank of America. And the crux of that conversation is this: Europe last year spent 450 billion euros on defense in 2024. Trump is nudging them to push higher. And according to Mr. Heelan of Bank of America, he says that if Trump has his way, that $450 billion can go up to 850 to 900 billion euros in the next 2 to 3 years. And that is only just like 1 percentage point extra of the European GDP. And a lot of it will be spent on fresh procurement, not just in things like pensions and paying salaries, etc., actual capex, which is what companies are concerned about. So I just want to play this soundbite out, the conversation that we had with Benjamin Heelan of Bank of America in terms of the opportunity and the spending increase which is projected. Listen in. Benjamin, if you have any estimates at your end, what was spent, say, on defense? How much did the EU spend on defense? What could that number go up by over the coming years? I mean, if you have some broad numbers.
Yeah, so Europe was spending roughly 1.5% of GDP in 2021, and at the end of last year, 2024, it was, like you mentioned in your introductory remarks, it was roughly 2%, just slightly below 2%. That's about 450 billion euro, of which roughly 20% was spent on actual kit procurement, right? Now, if you're going to go to 3%, that would be roughly 750 billion euro. If you're going to go to 3.5%, you're talking 850 to 900 billion euro, depending on how aggressive you want to be in terms of what Europe's growth rate is going to be. But that's the sort of step up that you are going to see. I think what's also important here is that the amount that is going to be spent on procurement is also going up. So when you think about Germany as an example, right? So Germany spent roughly 60 billion euros on defense in 2021. It had procurement spending of roughly 8 to 9 billion euro, so roughly 15% of the overall defense budget. If you believe in 2030, 2032, Germany is going to be spending 3% of GDP. That would be roughly 130 billion euro on defense. But it would be, if they spend roughly 30% on procurement, you're talking about 60 billion euro. So you can see why the stocks in Europe, the industry in Europe has done what it has done, because not only do you have growth in the defense budget, 450 billion as a block going to 800 billion, 850, potentially even 900. But you also get this real compounded effect in terms of the amount that is going to be spent on procurement is going up as a proportion as well. And so that's why you're seeing the growth rates that we're seeing across the sector. We put out a piece last week looking at benchmarking all of the European
defense names. 2019 to 2021, they grew, mid-single digit, 4-5%. They will be growing low to mid-teens in the next 4 years. And I think what you will also see is that 2027 through to 2030, there will be another acceleration in growth, because the orders that are coming today will only start to hit the P&Ls in 2027 and 2028.
Okay, so that's a view from Bank of America Securities, talking about the defense opportunity, specifically with an eye on Europe. All right, back to our markets here, and the cut on the Nifty is around 70-odd points. The Midcap index is slightly better off. It's flat. Bank Nifty also ditto. A little bit of a splash of green on the Bank Nifty as well. We have Mayuresh Joshi of William O'Neill join in. Mayuresh, the market at the index level is getting extremely narrow. Now, it's all about individual stocks, right? And individual stocks have been moving 10, 15, 20% in a span of a week. So give us some new ideas. What's fresh on your, on your radar?
Afternoon, Surabhi. So again, I think we are focusing primarily in terms of where earnings stability and earnings growth might continue happening at a decent pace. And therefore, I think selectively within BFSI, over the past few weeks, we've obviously added leadership stocks like ICICI Bank onto our domestic as well as our global portfolios. But I think within the broader markets itself, I think 3 or 4 ideas. One, I think healthcare as a space, and within healthcare, hospitals as a space, is still showing signs of relative strength. And the expectations largely getting baked in is that the earnings momentum that has continued into Q4 might very well continue into the next few quarters. And therefore, I think stocks like the Krishna Institute of Medical Sciences, where numbers have been decent so far, or even an Apollo Hospital out of the leadership names, where our own expectations is the kind of bed additions that can happen over the next few quarters in an asset-light mode will probably not add much leverage to the balance sheet. And at the same time, with operating leverage kicking in, as more hospitals mature, the average revenue per operating bed, the key number in terms of the average length of stay, and key areas that they're probably operating out of should actually start playing out quite positively. Again, within pharma, our own sense is that Strides Pharma in the broader markets has reported a decent set of numbers. The guidance that they've probably given is very encouraging. US sales itself expected to be around 400 million odd. They reported 293 million for the year gone by. And therefore, I think the massive growth that can come through with 10 or 12 ANDAs expected to get launched, the nasal spray, which is expected to get launched with the US FDA as well, can be huge enablers for the US business. The other regulated markets also expected to do reasonably well. The ratings, rankings, the earnings profile as we see it for both these spaces continue to be growing in a very robust fashion. The third space that we're probably looking at, which we have looked into and selectively adding more names, has been the agrochemical fertilizer space. And within this, again, I think names like Coromandel is something we continue holding on to our portfolios. But Deepak Fertilizer is one new name which we're probably looking at. Obviously, I think the leadership position that Deepak has in technical ammonium nitrate, in diluted and concentrated nitric acid, where it holds leadership position in South Asia, Southeast Asia, and the capacities that they're probably adding, both in TAN as well as the nitric acid capacity with backward integration. I think the numbers over the next few quarters can be relatively stable and strong as well. I think that is where I think we're looking out for areas where earnings momentum and earnings trajectory can remain strong. So I think a few sectors and a few ideations within those is what we are like.
In the agrochemical space, have you looked at this company called Bayer Crop Science? I think it's a German MNC company. Came out with numbers yesterday. The stock skyrocketed about 12%. It's predominantly owned by the promoters. About 72% is held by the promoters. But they do have some FI and DIA holding. Any thoughts on Bayer, if you've looked at it?
Absolutely. So again, I think same space as I just said. I think good set of numbers. In fact, very good set of numbers by Bayer. And again, I think the logic and the rationale remains the same. The expectation with better monsoons, which have already started across the length and breadth of our country, I think is expected to be very, very positive as the monsoon season progresses. And therefore, I think the Kharif season should be extremely well laid out. The farm gate prices, as we have been doing our channel checks, suggest are firming up as we speak. And at the same time, input costs have remained relatively benign. So the expectation in terms of input costs remaining benign might very well continue, including the likes of phosphoric acid, ammonia, potash to a large extent. And therefore, I think the basket of raw materials being relatively lower might mean EBITDA margin expansions happen onto the balance sheet. Obviously, we've been also hearing in terms of how government incentives can probably play out in terms of the subsidy payouts. And because of the DBT transfers that are probably happening over the last few years, the working capital cycle has probably got reduced for most balance sheets within this space itself. Return ratios remain strong, balance sheet remains extremely strong, and the kicker outside the monsoon is obviously going to be the next Rabi season, which might be equally good. So I think we're probably looking at a base case scenario where the next few quarters, volume-led price growth might actually play out on numbers. And therefore, I think what numbers Bayer has probably put out might actually continue. And as a space, I think we're generally optimistic looking at the ratings, rankings, and institutional holding that presents.
Okay, all right. What we're going to do is take a quick commercial break here. Mayuresh, stay with us. There's 10 minutes to go for market closing. We had the management of Hindustan Copper with us earlier. It's a rare appearance. So just want to quickly play out some sound bites. By the way, news at the bottom of the screen. SEBI has approved Hero FinCorp's 3,670 crore IPO. It's something which our colleague Ritu reported in the morning, and the approval has now come through. But let's take that break. More on this on the other side, leaving you with sound bites from the Hindustan Copper management.
We will definitely be going plus 4 million tons in 25-26 as far as ore is concerned. And as far as MIC is concerned, definitely it will be plus 30,000 metric tons. The production of one of my mine, there are 3 locations and 3 mining sites. Total production was roughly 3.5 million tons this year, which will scale up to 4 plus. So there will be a growth of 15% from the ore point of view. And from the MIC point of view, that is metal in copper, it will be from 25,000 to 30,000. So there also you will see a growth of more than 15%. Capex plan are quite huge. This year we will be at least 350 crores, I should say. And it will go on increasing every year, I should say. In Rakha, we are not going to put more money into that because it is in the MDO mode. The whole money will be brought by the MDO itself. But in other mines, I just mentioned we are going to put up a new concentrator plant. We are going to deepen our mines. So these development activities will need at least 350 crores of rupees this year.
और NRI? अरे उससे याद आया एक NRI अकाउंट खोलना है. Go for SBI NRI अकाउंट. Easy है. NRI रिलेशनशिप मैनेजर मिलेगा और पोर्टफोलियो इन्वेस्टमेंट सर्विसेज ब्रो. ओपन अकाउंट डिजिटली, इजी पीजी, लेमन स्क्वीजी. सबको पता है. SBI NRI सर्विसेज इजी है. सबको पता है.
Dadu, do you want to upgrade to business class?
Why not? Great flying, Captain.
Now go 449 kilometers in a single charge. MG Windsor EV Pro. Live business class.
The PM Surya Ghar program is a very, very good program and a very powerful program, which actually brings the access of power to everyone in their homes. So whether it is in urban areas or rural areas, everyone can generate power and use it for themselves. And in some cases, they can also supply to the grid. So I think that's a very unique program that the Prime Minister has started. And we strongly believe that it can actually democratize the use of power. And for us, it's not just about giving them the equipment, but it's also about operating them and giving them the benefit of what Har Ghar Solar program is there.
I believe I can. I believe I can change the world. I believe I can fly. I believe I can touch the sky. Welcome to the eye. I am ICFI. Belief called I. Welcome to the eye. The ICFI.
Welcome back. Well, a few minutes to go before we wind up trade, and a few stocks actually that are calling for attention in today's session. Is one such stock is Welspun Corp, one of those numbers that will be out post-market hours. The stock has been steady, but it's not moved in either direction actually. Dips have got bought into, it's consolidated around this 800 rupee odd mark. Mayuresh, y'all were quite positive, I think, on the pipe space. Now, this one has the tailwind because of the orders they get from the United States. And FY26 in all probability should be better than FY25 because there were no orders from the United States. Any view on this name?
Nigel, I think as a clear compliance disclaimer, we continue holding these stocks in our domestic and global portfolios. And you're absolutely right. I think the expectations in terms of more orders coming their way from the US market, as far as more capex is expected out of the Permian Basin, is something to be watched out for. And it can be a key player because of the subsidy that it runs out from the US as well. At the same time, if you probably look at the Middle East, the expectations in terms of orders from Saudi Aramco, specifically in the Saudi market, can be substantial ones as well. And the existing order book that they're probably having might cater to the execution there over the next few quarters as well. When it comes to the domestic market itself, the expectations in terms of both pipelines being laid, both for the CGD network as well as for waste and water management network, the expectation largely is that another 12 to 14,000 kilometers of pipes will need to get added over the next few quarters and years. And therefore, I think Wellcorp, having leadership in this parts of the market, might actually do well. From a balance sheet construct, again, I think reasonably placed as we speak. And therefore, I think the opportunities that present itself, both domestically and globally, make us believe that earnings should come out very, very reasonably for this counter over the next few quarters. So, yeah, I think we continue holding this stock, as I said, and probably remain optimistic. Let's see how numbers probably play out.
Apollo Micro, Mayuresh, have you had a look at it? In 2 days, the stock has surged close to about 25-26%. This is a company which grew, I think, 51% last year. And the company is talking about a revenue CAGR of 45 to 50% over the next 2 years. That's some solid growth. And plus, they won that big export order today. Analyze this company?
Sorry, Rima, it's out of our coverage area. So
out of your coverage. Okay. What about Schneider Electric? Big move today.
No, so decent set of numbers. And again, I think it's an absolute proxy in terms of expectations of the manufacturing story for India. And therefore, I think as numbers are playing out and as numbers are expected to be, our own sense is that it shall be a top-down outperformance that can probably come through. Now, the only risk for this company as we see it is, I think input cost inflation starts going higher. And that probably takes a little bit of a toll in terms of how the operating performance will be, specifically in terms of absolute EBITDA and the margin numbers as well. And second, I think execution. I think if they're not able to execute in terms of market expectations, in terms of revenue growth, in terms of margin performance, somewhere I think the outperformance that this stock has probably delivered because of lesser execution capabilities, if that probably comes through, I think that just might play out on the price. Apart from these two, our own sense is that as a base case scenario, I think there are sufficient tailwinds in terms of what opportunities the industry has to probably offer. And they've probably got the expertise to probably deliver. So again, I think rating rankings look absolutely spectacular as we see it. And therefore, anybody holding can hold on. These are the only two risk factors which we will be continuously monitoring for this stock under consensus.
Okay. All right, Mayuresh. Thanks very much for all that analysis. Just give us a minute, we'll recap the day. And it's been a quiet day. Actually, in sync with many of the other markets, especially the Western markets, we are ending the day down about 0.3% on the Nifty, which is in sync with how Europe is trading. Most of the markets there are down 0.25%. US futures are also down about 0.2, 0.3%. Slightly cautious approach to trade today. That's what the setup seems to be for Wall Street. Anyway, for our market, let's talk about the large cap losers first. ITC obviously a stock in news, 3% lower on that BAT block trade happening. Apollo Hospitals, IndusInd Bank, Ultratech Cement. These are some of the other names on the downside. Nestle, Tata Consumer. These are also names on the lower side. M&M and Aisha from the the auto space, along with Bajaj Auto, seeing some profit taking. Bajaj Auto lower by about 1% ahead of its numbers tomorrow. So this is where the weakness was. On the flip side, HDFC Life up 1.6%, but it pales in comparison to LIC. Look at the gains on LIC today, 7% up on that big stock move have been coming through. Talk about the other movers. Bajaj Finance, BEL, Hero MotoCorp were the other few gainers on the Nifty, and then it kind of trickles down. Otherwise, it's been either flat to slightly negative. But the mid-cap market was soaring. Lots and lots of big movers and shakers over there. I've named LIC. There are other names like Schneider we were just discussing, and a whole host of others, including Techno Electric and many other names. So overall, the mid-cap market was buzzing around MRPL, Concord Biotech, Astra Micro, Triveni Engineering 6%, and of course today's listing as well, 7% up on Bellrise Industries.
Just a bit disappointing the way the mid-cap index came off from